Hello, I'm Lynn Thompson, Strategic Advisor to the Commissioner of the Mideastern Athletic Conference, known as the MEAC. And throughout the past year, we've been honored to partner with our teammates at Wells Fargo to bring the Beyond College Web Series to you. And every month, we've jumped into great topics to build up your arsenal of skills and resources to take you to the next level in your journey to success and greatness. And today, as we prepare to wrap up our series, we hope you're ready to close it out in grand style as we navigate the paths to home ownership. Did you know that home ownership is one of the biggest and most important investments of your life? Well, it was for me. It was a milestone event for me as a young adult. You know, it takes a lot of planning and even more research. And it's that big of a deal. So big that we've got a team of Wells Fargo All Pros lined up to share info with you to help you navigate forward. Why do we do it? Well, that's why we do it, because of you. And that's what this partnership is all about. And as usual, this All Pro All-Star team is waiting to make this stuff happen for you. And working behind the scenes and directing this show, we've got pros like Angel Heyman, the Wells Fargo meetings and event planner. We've got Randy Brent and Dominique Garcia and others from our MEAC team who you may see or talk to later, but none of this will be possible without them. So we'll talk about our moderator and panelists who you'll meet on screen in just a few. And in just a few, we'll jump into the content of this great episode. And these pros are ready to roll out this stuff, and there's a lot of good stuff for you. That's what Wells Fargo and the MEAC have committed to do. And it's all for you because you're our next generation of leaders. So now let's talk about the MEAC. Who is the MEAC? Well, founded in 1970, the Mideastern Athletic Conference is a consortium of 8 of the greatest HBCUs in America who are aligned by mission and vision. And for over 53 years, our job has been simply to educate young people. Now, athletically, we compete at the highest levels of the NCAA. I mean, that's Division I. In 14 championship sports as a league, we've got football. We've been rolling in the HBCU National Championship game, better known as the Cricket Celebration Bowl, with a 6-2 record. And we just launched our fall broadcast season, and they got a lot of exciting stuff coming your way right about now with our MEAC Digital Network, a full listing of broadcasts on tap for you, featuring our Countdown to Kickoff football show, and that's going to be this Saturday at 11:30. That leads into our game of the week, which happens to be the South Carolina State Bulldogs at Howard University in a battle for the top spot in the MEAC football championship race. All of that will happen on ESPN Plus Live and a rebroadcast on ESPNU. And then on November 24th, the MEAC Volleyball Championships will tip off at 8:30 live on ESPNU. So thanks to many of our corporate partners, including Wells Fargo, we're able to bring this type of programming to you. In fact, Wells Fargo happens to be the MEAC Corporate Partner of the Year, and for good reason. You see, as always, Wells Fargo rolls out a lineup of their own great programming like this Beyond College Web Series. No other partner does it like they do, because that's what you deserve. You need to get this info straight from the well. It's a heck of a deal for the MEAC to team up with Wells Fargo. And we'll showcase all of the expertise that's available at this great company and give you a chance to meet these pros from our campuses, but more importantly, from this great company. And that's why we work with this great company to bring this information to you. Now, we've got a pro who's lined up and ready to roll for you right now. This guy is the man. He's the real MVP, and his name is Dewey Norwood. He's the Executive Director, Enterprise HBCU Strategy and External Engagement for Wells Fargo. Dewey, you've cooked up a smorgasbord of great stuff for all these youngsters, and it's time to serve it up, man.
Yes,
so
sir.
Put the cherry on top and let them eat, man.
Let's go. Lynn Thompson, ladies and gentlemen, and thank you, Lynn. It's been great to be with you all throughout this entire year. And I think we've gotten some really, really great things done. And I'm excited about where we're headed, certainly with today's topic around home ownership. Home ownership, I'll touch on my journey briefly as we got the QR code here with my LinkedIn information. Home ownership was a goal that my wife and I had, and we're fortunate to be homeowners today. Our children, one of our children is a homeowner. And so my hope is that for the folks that are on the lines today, whether your parents or grandmom, granddad were homeowners, or whether mom, aunts, and uncles are homeowners, you'll consider it, and you will take the information from this path that we're going to be sharing today to help you bridge it forward. So it's really, really important. And thank you for the kind words. We're excited about the work that we've been able to get accomplished, honored to be considered the corporate partner of the year by the mighty MEAC, and we want to live up to that standard in every way that we can. So again, a little bit about me on this slide. Feel free to connect with me on LinkedIn, and we'll continue the conversations from there. The next slide actually just spotlights a little bit about Wells Fargo. So $1.9 trillion is in assets, serving essentially 1 in 3 households here across the U.S. And 10% of the small businesses in the U.S. are engaging with us in different types of areas. There's lots of other information that you can take a peek at. You can get connected to us online, and certainly make sure you connect to the LinkedIn that we have available also for Wells Fargo. Go ahead and follow the content there in those areas. Hey, as we jump forward, the next slide just spotlights some of our corporate philanthropy efforts. And so if we look at the last 12 years, the firm has provided now over $119 million of financial support for higher education programming. And you see some of the organizations that are listed there. If you disaggregate that team, that's over $40 million of support specifically for HBCUs. Again, $40 million, now over $40 million of financial support. Significant strategic investments that our firm has been making to support you all that are attending HBCUs and the communities and the administrators there. So some really exciting work that's happened, and we're excited about what we're going to be building on for the future. Hey, the next slide is some homework for you. You guys have got your devices out. Go ahead and get a screen grab of this one here. You want to get connected into the talent community. Many of you all may be thinking about career opportunities. Maybe you're starting to make now that plan for that internship that's going to be coming up for you in 2025, which is right around the corner. Make sure you get connected into the talent community. Hey, maybe you're interested in creating an appointment with a banker. Maybe some of the things that you hear today put you on a path to be able to want to have a conversation with someone about a mortgage product, which we'll hear about, or about a savings account or a checking account, or one of these amazing Legends cards that you see here. We want you to be able to have a direct conversation with them. You're able to do that via the QR code that's listed there. And then last but not least, LifeSync, great resource for those that are maybe starting to thinking about investing. Many of you all may already be investing today, but you can connect into the resources through LifeSync and start building that pathway to building your nest egg and your investment portfolio in the days ahead. Hey, on the next slide, I touched on these just a moment ago. We've got our HBCU Legends debit cards up and running. We're really excited. We've got 44 of these that are available in celebration of amazing institutions. We've got 3 brand new cards that literally just launched. We've got our friends over at Albany State, got Kentucky State in the mix, and also Albany State, some of our schools from the SIAC HBCU conference that are connecting in. And we're really excited about continuing to add more schools, including many of our MEAC institutions. We hope that we'll be able to have them connected into the program in the days ahead. The next slide features one of my favorite cards, Mr. Thompson, and it is the one for the mighty MEAC. So, hey, if you're interested in celebrating the MEAC, you can jump out to Wells Fargo's Card Design Studio. Maybe you have one of the standard beautiful red debit cards now. You can customize that totally free of charge. Just log on. When you create your checking account, you can actually select from these amazing cards that we have available again through the Card Design Studio. So some great information there. Step on in, grab you that MEAC card as you build your banking relationship with us. Well, listen, I think we've touched on the major pieces that we want to hear for right now. Here are our rules for the game, team, on the next slide here. We're going to have a candid conversation today. We brought in senior leaders and experts when it comes to home ownership. This is a safe space. Please ask the questions that are top of mind for you. We've got some questions that have come in advance. Utilize the chat feature to drop in a comment, share information with others. But this is a safe space where you can ask safe questions. And here's the final 2 items. Remember, we have a standard rule. If you submit a question online, certainly individuals will see your name there. If you submit a question to us or submitted a question to us in advance, we're never going to read your name out on the broadcast. So rest assured, you won't be. I'm going to say, well, again, we just won't read your name out on the broadcast. I'll put it that way. But I promise you, if you have a question that's top of mind, there's someone else that has that same question top of mind as well. So With that said, I'm really excited to bring on Arlene and the team, our amazing partners over in Wells Fargo Home Mortgage. Arlene, thank you so much for putting this webinar together. As Mr. Thompson said, we've got a great lineup of experts, and we've even got some topical news here with the changes in interest rates that were announced here earlier today by Fed Chair Powell. So maybe that will come up as a part of our conversation today. But Arlene, we're really excited. We're going to turn the reins over to you from here, and then we'll bring back Mr. Thompson and the team a little bit later on the broadcast for the Q&A. So Arlene, please take it away.
Thank you, Dewey. Appreciate it.
You're welcome.
And thank you guys all for the opportunity to connect with you all. So, I am a mortgage business development representative here at Wells Fargo. I am in Tempe, Arizona. And today we're going to learn a little bit more about becoming a homeowner. So, this event will help you gain a basic understanding of how the home buying and home financing process works. So, you'll know what to expect and be better able to make informed decisions. So, let's move on over to the agenda and what we're going to be covering today. So, deciding to buy a home, qualifying for a mortgage, credit basics, home financing basics, and as well, home financing process. So let's start off with deciding to buy a home. We'll take a look at some factors here. So, how does renting compare to buying? Owning a home is both an opportunity and a responsibility. Whether you're ready to buy a home depends on many factors, including your own personal situation. Let's consider a few benefits and features of buying compared to renting. Even if your mortgage payment is about the same amount as a monthly rent payment, the difference to consider is where the money goes. Your rent payment goes entirely to the property owner. When you own your home, you are the property owner. So a portion of your monthly mortgage payment reduces to your mortgage principal balance, which goes toward building your home equity. Additionally, if required, a portion of your monthly payment may be escrowed to pay property taxes, homeowners insurance, and possibly mortgage insurance when those bills are due. Keep in mind that at the beginning of a mortgage loan, more of the monthly payment will be applied toward interest than toward principal. The principal balance will be reduced over time. Owning a home could also mean becoming part of a community. However, unlike renting, it's not as easy to move. If life circumstances change and you need to move to another city, you may not be able to sell your home as quickly as you might like. If you're a renter and you need more space or want to pay less rent, you can move to another apartment. Owning means you have more control over your own space. You can have pets, plant trees, flowers, whatever you want, paint the walls any color you like. It also means more responsibility for that space, like yard work, home repairs, calling the plumber yourself, things you probably wouldn't be responsible for as a renter. So let's take a look at home ownership as a long term commitment. Successful homeowners recognize that home ownership is a long term commitment to a mortgage payment, property taxes, insurance, utilities, and maintenance. Thinking about your situation and goals will help you make an informed decision about whether home ownership is right for you. If you have a stable income, pay your bills on time, plan to stay in your home for a number of years, and feel prepared for this financial responsibility, then you just might be ready to own a home. So let's take a look at some qualifications for a mortgage. So, what do lenders consider? This is an important question because we want you to be a successful homeowner. We'll consider your entire financial picture. Lenders take a look at your income. That would include all your sources of income and the reliability that it will continue, your current debts and credit history, your debt to income and housing to income ratios, your assets and available funds to see if you have enough for a down payment and closing costs, and finally, the property itself. So let's explore some key questions that you should ask yourself. Do I have a source of income to make monthly payments? Income can come from primary, secondary, and part time jobs, as well as overtime, bonuses, and commissions. You may use other sources of income if you want them considered for payment, including retirement or veteran benefits, disability payments, alimony, child support, and rental or investment income, provided that they can be verified as stable, reliable, and likely to continue for at least 3 years. Another question to consider: do I pay my bills, loans, credit cards, and other debts on time? What's my credit history, my credit score? Do I have a lot of other outstanding debt? Your lender will examine your payment habits, your credit history, and your credit score. It's a good idea to check your credit history and correct any problems before applying. Now, another question to consider: do I have enough funds for a down payment and closing costs? You may use funds from a savings account, certificate of deposit, like a CD is what we call it, investments, or a retirement fund. In some cases, you may be able to use a gift from a relative, a friend, employer, or a not for profit organization. In many cases, you will also have to demonstrate that you have additional funds in your accounts to cover several months of mortgage, tax, and insurance payments. And another question to consider: what's the market value of the property that I want to purchase? Your lender will order a property appraisal to verify its current market value, which may be different from the purchase price. The appraisal will be completed by a professional and will consider such thing as the property size, condition, and as well the neighborhood. So let's take a look at: how do lenders evaluate my ability to repay? The amount you can borrow will depend on a number of factors, including your ability to repay the loan. We will use two ratio based guidelines that you can see here to evaluate your ability to repay. The first is your debt to income ratio. Your debt to income ratio is the percentage of your gross monthly income that is spent on monthly debt payments. So that means your expected monthly mortgage payment, which includes principal, interest, taxes, and insurance, plus your other monthly debt obligations. For example, like your car payments, credit cards, student loans, etc., are compared to your gross, which is your pre tax monthly income. Mortgage program guidelines vary, but a good rule of thumb is to keep your total debt level at or below 36% of your gross monthly income. But keep in mind, some programs may actually allow for higher ratios. The second would be housing to income ratio, is the percentage of your monthly income that is spent on monthly housing payments. So your lender will also compare just your expected monthly mortgage payment, which does include taxes and insurance, to your gross monthly income. Mortgage program guidelines vary, but again, a good rule of thumb is to keep your housing expense level at or below 28%. Even if you fall within these guidelines, make certain that you feel comfortable making your monthly mortgage and as well your insurance and tax payments, along with the payments on all other monthly obligations like savings, groceries, childcare. And remember those other home related costs too, like utilities, maintenance, and any kind of unexpected repairs that you were probably not used to if you were renting. And we can talk a little bit more about that later. All right, so some credit basics. Let's take a look at credit score. So, your credit score is a number based on your credit history. Credit scores range from 300 to 850. The higher the score, the better the credit. And lenders consider your credit history and credit score when making decisions about loan approval, interest rate, loan amount, and the type of loan you can get. If you apply for a loan with one or more borrowers, lenders evaluate the credit of all applicants. You might wonder how credit scores are calculated. Approximately 35% is your payment track record. So the most important thing you can do is pay your bills on time. About 30% is what you owe. So owing money on many accounts suggests to lenders you may be overextended. And approximately 15% is the length of credit history. Lenders want to see you can responsibly manage credit accounts over time. About 10% is new credit accumulated in the previous 12 to 18 months. Opening several credit accounts in a short period of time can indicate a greater risk. And about 10% is the type of credit and use and the money available to you. If you have several credit types, or excuse me, if you have several types of credit, keep a healthy balance between revolving credit cards and installment loans. Your lender wants you to be successful, and will determine your loan pricing by evaluating these risk factors. Your pricing could change if any of your risk factors change after the initial loan application review. So for example, if your credit score changed before closing, generally any history of non-payment or late payments on any loans or debt may lower your credit score and increase your interest rate and cost. Your credit history affects your borrowing options, so it's important to know what your credit score is and understand the variables that affect it. So let's move on to how can I improve my credit score? Managing and improving your credit score is possible by a few things. Paying down revolving debt, so that could be don't move debt around between credit cards. Making bill paying automatic. Set up electronic withdrawals from your checking or your savings account to help you make on-time bill payments. Not opening a lot of new accounts. Instead, keep and maintain your older accounts. Contacting your creditors if you notice any trouble. Most creditors are willing to work out a payment schedule rather than see you miss any payments or no payments at all. So let's take a look at home financing basics. So, what are the components of a mortgage payment? A mortgage payment is typically made up of four components: principal, interest, taxes, and insurance. The principal portion is the amount that pays down your outstanding loan amount. Interest is the cost of borrowing money. The amount of interest you pay is determined by your interest rate and your loan amounts. Taxes are the property assessments collected by your local government. Lenders typically collect a portion of these taxes in every mortgage payment and hold the funds in an account, which is what we call an escrow account, until they are due, and then are paid on your behalf. Homeowners insurance offers financial protection from loss of damage to the property, like property taxes. Homeowners insurance payments are typically collected by the lender, held in an escrow account, and then paid on your behalf to the insurance company. There are many components to a homeowner's insurance policy, including dwelling, personal property, and liability. You'll want to make sure you have the right amount of coverage to fit your individual needs. If you're a first time home buyer, you may want to consult with a knowledgeable agent who can help you understand all of your options. And if you make less than a 20% down payment, you will also likely need to purchase mortgage insurance. And we can talk a little bit more about that later. All right, so next slide. What other expenses should I plan for? The cost of home ownerships goes beyond the monthly mortgage payments. And it's important to plan for these types of expenses at this stage. When you're considering buying a home, depending on what kind of home you buy, the types of expenses and the costs will vary. Types of expenses you should plan for could include windows, home owners insurance deductibles, roof, appliances, furnishings, landscaping, HOA, which is association dues, foundations, and utility bills. Consider all the expenses you're likely to incur when you estimate the total monthly cost of home ownership, like your house payment, property taxes, homeowners insurance, and any home upkeep cost. So, what do I need to know about making a down payment? A down payment is an upfront payment toward the total cost of the home you plan to buy. It's typically a percentage of the home's cost that makes up the difference between the price of the home and the amount of the mortgage. So, for example, if the average down payment on a house is 20%, for a $400,000 home, a 20% down payment would be $80,000, and a mortgage would be used to finance the remaining $320,000. So the more money you have available for a down payment on your home, the less you'll have to borrow. Borrowing less means you can reduce the interest paid over the life of the loan and lower your total mortgage cost. Your choice of down payment can also influence the financing options and interest rate that are available for you. So one of the common questions we constantly get asked is, do I need 20% down a down payment to buy a home? Many people wonder that, and the answer is no, not always. There are other options available if you qualify. Some financing programs allow for a 3% down payment on a confirming fixed rate loan, and in some cases, no down payment is required for qualified home buyers. Plus, any gifts from family may be allowed for all or a portion of the down payment, and as well for closing costs. You can talk with any of us about loan amount, type of loan, property type, income, first time home buyer, and home buyer education requirements to ensure eligibility. Keep in mind that with a low down payment, mortgage insurance will be required, which will also increase the cost of the loan and will increase your monthly payment. So let's talk about how can I save for a down payment? So a lot of people ask, how am I able to do that? And here are some tips that can be helpful for you. Pay yourself first. When you pay your monthly bills, make the first payment to your savings or investment account. Better still, set up an automatic transfer from your checking account to a dedicated down payment savings account so you don't forget. Another option, spend less, save more. The less you spend on items you don't need, the more you'll save for a down payment. And finally, create a spending plan. Record your expenses and compare them to your income. Tracking your spending habits reveals potential areas where you can save. You can make more informed mortgage choices when you understand how your loan amount and down payment are related. Typically, loan programs with low down payment options may require mortgage insurance, which will again increase the monthly mortgage payment. So, what kind of loan options are available? Different situations call for different types of loans. Wells Fargo provides several home financing options that help qualified home buyers achieve the goal of home ownership, including programs that don't require a large down payment or traditional credit. Some examples of available loan options include fixed rate mortgages, adjustable rate mortgages, which we also call ARMs, FHA loans, VA loans, jumbo loans, and loans for newly built homes. I would be happy to discuss any various loan options that we do have available with Wells Fargo so you can evaluate the features and benefits of each loan and any other considerations that you can help with any informed decisions. So, what is mortgage insurance? Mortgage insurance protects a lender if a borrower is unable to repay their mortgage loan and is required when you put down less than 20%. So, when the loan is a conventional loan, it's called primary mortgage insurance, or what you might also hear as PMI. When your loan is a government loan, so that would be an FHA or a VA, it's called mortgage insurance premium or mortgage insurance or MI. All right. So, how do I know how much I could borrow? So, let's talk a little bit about pre qualification and the priority buyer approval letter. So, before you begin shopping for a home, it's a good idea to find a home loan amount that you'll be comfortable with. Our pre qualification and pre approval letters can provide you with your home loan price range while letting sellers and real estate professionals know you're a serious buyer. Our pre qualification letter may be a good option when you're thinking about buying a home, but haven't started looking for a property and aren't yet ready to fill out a mortgage application. It will provide an opinion of how much you can borrow based on some basic financial information you provide, but that hasn't yet been verified. If you're actively looking for a property, want to narrow your home search, and are ready to fill out a mortgage application, that is where our priority buyer pre approval letter comes in. And that may be a good option for you at that time. A pre approval involves a more detailed look at your financial data and is based on a preliminary review of your credit information. Keep in mind, though, that a priority buyer pre approval letter is not a commitment to lend. A loan commitment can only be made up upon receipt of an appraisal, title commitment, and final verification of all required financial documentation. This pre approval is subject to change or cancellation if the requested loan no longer meets applicable regulatory requirements and is not available on all loan products. So let's take a look at some home financing process. So, what are the steps in home financing process? As you prepare to finance your home, it's important to know what to expect along the way. You can count on your team here at Wells Fargo to guide you through the process so you'll always know what to expect next. A high level overview of the loan application process can be broken into four different steps: completing your application, financial and property review, preparing to close, and attending your closing. The first step is completing your application, which can be started in two ways: online or through a home mortgage consultant. Our online mortgage application is easy to use and allows you to conveniently apply at your own time. or you can meet directly with a home mortgage consultant who will help you complete the application process. Once you've submitted your initial information, you'll receive and review your initial disclosure package. This package includes your loan estimate, which will help you understand the estimated closing costs and fees associated with your loan. So we can proceed with your loan application. You'll need to provide your intent to proceed. Sign and return all required disclosures from your initial disclosure package and pay any applicable fees. You can conveniently do all of this online as well. This brings us to step two, which would be the financial and property review. So, your home loan processor and the rest of your team will look over your supporting documents to verify your application. This includes things like employment, income, and financial information verification. If you need anything else, if we need anything else from you, we'll let you know right away. We'll also order an independent appraisal to make sure the property value backs up the purchase price. Then we send everything to the home loan underwriter. The underwriter will review all of your information to make a final decision on your application. If you are approved, you'll get your final commitment letter from us and be ready for step three, which is preparing to close. During this step, you'll schedule a closing date, receive and review your closing disclosure, which shows the actual terms and the cost of the loan. These costs may include homeowners insurance or mortgage insurance premiums if you do have that, and as well escrow deposits for property taxes. And lastly, verify the amount of money needed at closing. And now is when you'd be ready for step four, attending your closing. This is when you meet with your closing agent who will provide you with a closing package that includes all of the details of your loan along with important disclosures. Be prepared to read inside multiple documents and be sure to ask all the questions if there's something that you don't understand. All right, so next would be what should I do during the loan process? So many buyers ask and wonder this question. This is a great question, and there are a few important steps that you can take to help the process go more smoothly. Provide accurate information during your loan application interview. Discrepancies in your information could delay your application. Return your home mortgage consultants or your loan processor's calls promptly. Provide any information or documents they request quickly. You can also work on getting homeowners insurance quotes and a home inspection. Remember to maintain your credit during this time. Do not make big purchases. Don't take on any additional debt or make large deposits or transfers unrelated to your loan until after closing. So, how can Wells Fargo help? As a fair and responsible lending lender, Wells Fargo is ready to help you find financing that serves your immediate and long term home financing needs. Wells Fargo Home Mortgage Consultants will help you understand your options and clearly explain how different loan programs work so you can make the right informed decisions. We also have a pre qualification tool. You can get pre qualified for a loan amount and see an estimate of down payment, monthly payment breakdowns, and more. If you just need to answer a few questions in as little as 3 minutes. There's no documentation needed, no impact to your credit score. And here on the right hand side, we do have a website information in case you do need it. And this is where you can go to get pre qualified if you're interested. We also have a home search tool. The home search tool, you can gain valuable insights and see estimated home values using this exclusive one stop real estate tool. It's free and easy for Wells Fargo customers. All you have to do is log in with your account credentials and begin exploring. You can search for homes in this area. You can find homes for sale, filter by price, neighborhood, school ratings, and more. You can also save your searches and get tailored updates emailed to you. All right, so in our next slide, this is where we ended off. But if you have any questions, I know we'll get to that in just a moment. But Dewey, I think this is where I'm going to go ahead and hand it off to you.
So listen, I my seatbelt was on, Arlene, and I had to tighten it a couple of times because you. All right, that's a lot
I
for
know.
our scholars to digest. I heard acronyms on there. I heard PMI. There was a slide that said, oh, by the way, don't forget, you're paying the mortgage but in the beginning, you're primarily paying interest. And hey, if something happens to the roof, you own it. And if you need to fix the driveway, you own it. The yard is messed up, fill in the blank, you own it. Storm damage, you own it. You have to have insurance. Where do they start? Arlie, a scholar
Yes.
that's on that's saying, I'm gonna have my first job, I want to own a home. Where do they start? I want you to hit those pieces just one more time, and then we're going to bring
Yeah.
Mr. Thompson and the rest of the team in for the balance of the Q&A.
Yeah, absolutely.
Wow.
So where to start? Honestly, speak to one of our consultants. They're the
Sure.
experts. They're here to guide you through all of the questions they have. It's not an easy process. It's scary, it's stressful,
Yeah.
and it's okay. That's what we're here for. We're here to help them through, guide them through. You don't have to be ready at all whatsoever. That's the beauty
Right.
of it. And the more that you can prepare and the earlier that you can prepare, the better.
Yeah, we love it. We love it. And it may start with that, getting that down payment. You talked about paying yourself first and building that savings account and just putting a little bit aside
Mhm.
there. And hey, let's start small. And there's also some great resources that are available for first-time home owners. And I know you touched on some of those, but we'll make it a little deeper. Mr. Thompson, I'd love to bring you into the discussion here. We have a ton of items, and we also can't bring just Mr. Thompson in. We got to bring in Chris as well. Wells Fargo. This is like a 1-2 punch. This is the last show, so we're pulling out all the stops. Mr. Thompson, we're going to give it to you. Chris, anything that you want to touch on here, maybe to add on to any of the pieces that Arlene has touched on. And I got one for you directly. So hold on, I need to point nicely. I can't point nicely. I got to do it this way. I got one for you directly that's hot off the press that I want you to touch on.
All right. So I will add that, to Arlene's point, it's a lot to digest for our young consumers.
Yeah.
And what I tell my kids is, hey, go take a look at your credit report. You shouldn't get in front of a lender and be surprised with anything that's on your credit report. And there's a free
Wow.
resource available to you. And I put it there in the chat, www.annualcreditreport.com. As a consumer, you're entitled to a free copy of each of the 3 bureaus. And that way, when you go in and have that conversation with your lender, or if you're applying for other types of credit, you'll have some sense of what they're looking at. So no one should go into that conversation and get blindsided with what's on their credit report.
Chris, we love it. We love it. Mr. Thompson, I got one that would love to toss over to Chris and then give it to you here. We just saw an announcement. We touched on this in the open about an interest rate change that literally happened today. The Federal Reserve made a decision to lower interest rates by 1/4 of a point. What does that mean for borrowers current day, or maybe borrowers for the future? And put on your future tellers the hat around things, man. What are we thinking about going forward? Please.
Yeah, it's certainly a positive sign, not to get into rate specific conversation, but just to say that when we hear about interest rates being lowered, then as a consumer, you should also understand that that's going to give you more purchasing power. So your affordability will go up because the interest rate goes down. So that's the key takeaway there. And I'll default to Arlene if she has something relative to Wells Fargo's rates.
Yeah, no, absolutely. I think everything that you just pointed out, to your point, it's always tricky when we go into interest rates just because everyone can
Yes.
qualify for something so different. So
Mhm.
yes, we can advertise our interest rates, at a certain range, but someone might qualify for something very different. And that's where
Correct.
speaking to that consultant can be really handy.
There you go. Whether it's a 30-year term, whether it's a 15-year term, whether it's that adjustable rate, that ARM. Well, we give you like 9,000 acronyms, by the way, too. So you got some homework afterwards. You're gonna have to go back and revisit some of these items. So, Mr. Thompson, please, I want to give you some space in here. We're going to keep the Q&A going, Doc.
I just had a conversation with my niece and a couple of grad students who were about to pay several months in advance on rent for their apartments, and the discussion ensued about, well, why not purchase? These are grad students who are aware of their credit scores already, and a couple of them already are employed on their career paths, and what they're paying in terms of their monthly rent is already equal to what the mortgage would be. And when we had the discussion with them, they were like, I didn't think I could possibly purchase at this point. And they were afraid of the process. So how do you inform a potential first-time home buyer? How do you allay those fears? Because that's something that they're afraid of when they hear that this could potentially be the most important purchase of their lives.
You
Yeah,
know,
I
I'll start with
Chris, you want to talk?
today, right? So Arlene did a great job covering at a very high level some of the nuances of the home buying process. So now you have some talking points. Following today's presentation, you'll receive an email with the link for you to go and there are some tools that you can go and play with. Use a scenario of what you're paying for rent and get some sense of what what that translates to in terms of a mortgage payment.
Yeah.
And then to Arlene's point, picking up the phone, talking with the home mortgage consultant, have someone look at your unique financial situation and walk you through what your options are, and then you can go into this conversation feeling empowered and not be overcome with all the particulars and all the obstacles that are potentially there. Someone will look at your unique financial situation and help you navigate the road to home ownership.
I know a 24-year-old kid that just graduated from a college here that bought a house, and he bought a house before buying a car.
Wow.
Wow, that's smart.
Isn't that smart? His mother gave him a car, her car, a beat up hoop, and he bought a house. So he's so far ahead of the game now, and he's got some equity in the house already too, believe it or not, got a little equity. And a lot of kids don't understand that process, and it takes time to understand it because it intimidates the average youngster who's just getting into this. What do you say to the kid that might want to get into flipping houses rather than becoming a first-time homeowner to live in the house?
Well, a duplex or a quad,
Yeah,
depending on what market you're in. You know, I live in Atlanta, for example. We don't have as much multifamily inventory as some of the northern cities, but a duplex, we see those quite often, and that's a great way. You'll have someone renting out the other uh, portion of the property, and you can receive that rental income. You'll be able to live in the one side of the duplex, if you will. And then eventually, when you do decide to upgrade, now you have income generating property that you can add to and build off of for your portfolio.
great point. Great point. Well, I know we got some participants out there that are probably listening, but we want you to participate. Can I get an amen for that, Dewey?
Let the church say amen. Indeed.
Amen.
We need it. So scholars, continue to push those questions in for us with things. Arlene, I'll throw another one out there as we're continuing to get other items come in here. The different terms you can have, and we touched on these a moment ago, a 15-year term or an adjustable rate, or we can have a 30-year. There's all types of mortgage products that are out there. Is it up to the lenders to decide the best product suite that a scholar, a young grad, someone that's now buying that first-time home needs to decide on? Is that one of the spaces where you counsel, or do they have to know coming in, hey, this is the product suite that I want, and here's going to be my down payment? Would you touch on those pieces just one more time for us?
Yeah, absolutely. I think it also, to answer a little bit of that question, it goes both ways. I think it's if you are able to, do some research, your own personal research, learn a little bit more about the different
Sure.
programs and see if it would be beneficial for you. The ARMS, which is the adjustable rate mortgage, that would be a great option if you are looking for a home that you're not planning to stay in for too long. That might be a great option for you. So it really just depends on what what are your plans? What are your goals, whether it's short term, long term, and really trying to have a better understanding of what would be the most beneficial. If you are, a college student, maybe the first home is not your forever home. Maybe you're only planning there, to be there for a couple years, or maybe you're in a job where you're going to get promoted, so they're going to ask you to move. That might also be a great option for an ARM. So it really just depends on where you are in your life, and that's definitely those questions that you can ask our consultants about, because that would be, yeah, the most beneficial is to ask the questions, because we want to make sure that the customer and the or college students are well educated on what you're signing yourself up for, because this is a big decision. It's a very scary, stressful, big decision, and so of course we want to make sure that this is right for you.
Outstanding. Outstanding. Chris, anything to add on to this one?
Yeah, I'm just going to assign a little homework since we have the scholars on the line. Again, I have college-age children, and I challenge them with the same thing. Go look at your credit report. It's been said that the number one issue with credit reports is incorrect information. So I use myself as an example. I have a twin sister, and I have a son that's a junior. So between my sister and my son, invariably, sometimes their information could potentially show up on my credit report. And so again, even as a conscientious consumer, I have to use that tool, and annualcreditreport.com is something that's been set up just for that purpose, so that we can get free access to our credit report and stay on top of those things before we decide to make a major purchase.
Outstanding. Outstanding. Mr. Thompson, let's give it back to you. Anything else top of mind from your side, from the Q&A perspective?
I see there's a direct message just came to you. Is that you? Yeah, somebody came about Veterans Day next week. Any special options for mortgages for vets?
Wow.
I mean, absolutely. The vets have a leg up on a lot of opportunities. I remember the GI Bill for so many people in going to college, and provides so many other opportunities. What does Wells have in terms of that in consultants? I'm sure there are opportunities for veterans, and if you let's say if you're working in the industry, in industry related opportunities for people, but definitely for veterans, opportunities there for them.
I can start, Chris. I'll add the reason also is because that's actually something that we're focusing on this month with our partners in Wells. It's next Monday is Veterans Day, so let's put a focus on what we have to offer for our veterans. And so we do have a VA loan, and some quick highlights on that. There's 100% financing. There's up to 0 down payment, no funding fee if the vet is 10% or more disabled. The VA benefits can also be extended, to spouses. And a really great advantage that Wells Fargo has on VA loans is that there is no origination fees for the borrower. So those are some things I wanted to add in there. But Chris, I don't know if you have anything else to add on that.
No, you did a great job covering it. Thank you.
Right. So some really good ones out there. Again, scholars, we're going to double check the inbox here to see if we have anything new that has come in any types of areas. So we're going to give it just a moment here. Okay, this is a really nice one that's come in. And again, scholars, please continue to feed the inbox here with the different additional items. Does Wells Fargo offer any help to judge the price of a home in a particular market or city? And this is an interesting one, because the markets in Atlanta are probably different than the markets in Austin, Texas, or in Northern California, or in New York. Shout out to all my New Yorkers on the line today. How do folks determine the pricing and the components there, again, in a city juxtaposed to another city? Please, team, unpack that one for us.
So we do have our home buyer access grant, which is available in some of the markets that you listed. So Dallas, Texas, Minneapolis, New Jersey, New York, Philadelphia, Washington, D.C., Atlanta, Baltimore, Charlotte. So if you're interested in purchasing in any of those markets, or if you currently reside in one of those markets, then you could potentially be eligible. The beautiful thing about our Homebuyer Access Grant, it's a $10,000 forgivable grant, so there is no repayment tied to it. And if you're in one of those cities in a designated census tract, then irregardless of where you move to, that grant will now be portable. You can take it with you, regardless of where you purchase in the country. And the reverse is if you're anywhere else in the country and you're looking to move to one of those cities, then you may want to look into that particular grant, because it will also help you if you buy in a designated census tract in one of those cities. So again, if those cities resonate with you, either you're in the city looking to relocate away, or you're looking to relocate to those cities that I mentioned, then you should definitely reach out and talk to one of our consultants about your eligibility for the Homebuyer Access Grant.
Love it. Love it. Chris, that's good there. Arlene, what do you want to add on to that one? Pretty important topic there.
Yeah, no, absolutely. I feel like Chris brought up one of the most major points. If I'm being honest, that's a great option right there. And I know I didn't get the chance to, mention this in the slides, and I don't know if this might be helpful, but um, going back to a little bit around, do I need that 20% down? I think that's always a big concern for a lot of first-time home buyers, and it's a lot. It's a lot to save up for a lot of the homes that are, their value at what they're selling for right now. And it's hard to come up with that 20%. And it doesn't mean that you always have to, as I mentioned in the slides. And we actually have what we call the Dream Plan Home with Wells Fargo, and it offers as little as 3% down. So that is definitely an option for a lot of our first-time home buyers that they can discuss with our consultants, of course.
We love it. We love it.
And I'll add to that, Arlene. With the Dream Plan Home, we also have more money to throw into the deal. We have the Dream Plan Home closing costs. So we talked about down payment, and now we also have some more monies to share with you with $5,000 for closing costs. Again, you want to talk to your home mortgage consultant and confirm your eligibility for these programs. But
Sure.
another key piece with it is you can layer this with other potential programs in the areas that you're looking to purchase. So having that conversation with your home mortgage consultant, identifying your eligibility for these programs, take advantage of the Dream Plan Home closing costs, take advantage of the Homebuyer Access Grant. There may be some other local programs tied to the county or the city that you're moving into, and it can significantly reduce the amount of monies that you need to bring to the table to be able to execute against this home purchase. So again, don't let the upfront costs turn you away. There are a number of resources specifically tied to first-time home buyers or borrowers that are looking to get into this process of homeownership, and we certainly want to encourage you to take advantage of those resources.
Chris, we love it. You mentioned layering. Is that like when I make my sandwich at the house? I can make it the thick stack, right?
That's right. You got your local programs. You can have your programs. Maybe even your employer may be having some resources. So as you start to negotiate jobs, part of that offer may have some monies, employer assisted housing. So there are a number of ways to address the upfront cost of homeownership. And so don't be turned away. Let's have that conversation, and let's make sure that you are exploring all available options before you decide that this is something that you want to take advantage of.
We love it. We love it. Tim, we had another follow-up that came in here. What are some of the ways to negotiate a good or the best interest rate? And I'm going to add on to this, does my interest rate stay with me the whole time? And also, how do I get that 2% interest rate? That's the other question. The 2%.
That's a good question.
Yeah,
I know you know. I'm gonna let you answer that one.
That's a good question. I think everyone's kind of waiting for that. We all kind of wish we would see that again. The reality is I don't think that's something that we'll see, at least not anytime soon, unfortunately. But you never know. You never know. Interest rates are always changing, hourly, daily, weekly, just like how we talked about today. They changed today. So it's hard to tell. I don't know if Chris, you want to add anything as far as how we can potentially
The
lower.
negotiation piece.
Yeah, the
Or Marie,
negotiation
the
piece.
main focus is the negotiation piece on this, because everybody would love to have that 2% mortgage, right? Is that something that folks can go in and negotiate, Chris and Arlene? Is that even an option? Or is it based really on the kind of
Well,
market conditions?
it's based on market conditions. Yeah, if we can't give you 2% when we don't have 2%, right? So, you know, there's that part, right? So, certainly talking with your lender partner, your home mortgage consultant, they'll let you know what the prevailing market rate is, and then there may be opportunities to negotiate a buy down, or if there's monies involved in the deal where the seller is paying closing costs, and you can use some of those monies towards the buy down. So again, I'm throwing a lot of terms at you, but again, having that conversation with your home mortgage consultant, they look at your unique financial situation. They look at all the particulars of the transaction that you're involved in. There may be some monies involved with, like I said, seller concessions. We talked about employer assisted housing. We talked about layering. As we get into those layering conversations, there may be some monies left on the table where you may decide to use that to buy down your rate. So that's certainly an option. But again, having that one-on-one consult will steer you in the right direction around those options.
Love it, love it, love it, love it. Mr. Thompson, I've got a couple more here, but I don't want to monopolize it with things.
No.
Anything else top of mind for you on this one?
No, I'm just thinking of a lot of kids who are the first in family to go to college may be combined with the first in family to be a potential homeowner. You know, and a lot of times we refer back to our family to provide guidance and some knowledge for us. What about the kid who I'm the first in family to go to college, and now I'm potentially the first in my family to be a homeowner? You know, there's no familial advice or consultant that can step up to the plate and say, "But this is how you do this." For somebody that might be listening here, you know, a lot of times that there may not be a level of confidence in the whole process. You know, you got to reach out into your village for some support sometimes. And so what do you say to that particular kid? Who should they talk to?
You know, I'll touch on that one. I spent a lot of time in this space, and, you know, I try to demystify the process as best as possible. There are a number of resources. So write this down, and I'll put it in the chat box as well. HUD.gov has a resource base where you can connect. I'm sorry. Where you can connect with local housing counseling professionals, and they can walk you through the process over and above conversations with your lender partner. That's a good um, it's a good preparatory phase to have somebody sit down and kind of coach you through it. And they have financial coaches that have been vetted by HUD. They've been certified by HUD. So there is that quality control there that says that you're in good hands. And so they receive federal funding for the sole purpose of being in position to answer your questions and walk you through the process. And so as you engage with your home mortgage consultant, let them know that you're working with the housing counselor. Again, it creates that safety net. So you know, there is safety in the multitude of counsel. So when you have the opportunity to have someone who's going to give you free advice, that mortgage consultant is in a position to give you advice related to the mortgage loan. That housing counselor is going to look at your overall profile and give you counseling around your consumer habits. So it may be some things that even you haven't uncovered related to your consumer habits that housing counselor can help you and give you guidance even before you talk to a mortgage consultant. So if this is all new to you and you don't have anyone in your immediate village, then expand your village, expand your network by engaging a housing counselor and let them help you navigate this process. And you can do it. We build a house one brick at a time. By joining today's call, you've set the process in motion and you've laid a firm foundation to build on. And so I encourage you to take advantage of the resources I shared with regards to pulling your credit report. Go to HUD.gov, put in your zip code. They'll give you an unlimited number of counseling agencies there in your local market that you can have a conversation with, and they'll invite you in. They also have follow-up workshops that they will encourage you to come and participate in. So this is just the beginning. Today's session, you've laid a foundation. Now let's take the steps necessary to build on that foundation.
Love it, love it, love it. Mr. Thompson, we'll take maybe 2 or 3 more and then maybe get some closing thoughts from the team relative to things. There was a little bit of a discussion earlier around insurance. Arlene, is it a requirement? This is what the person proposed here, the direction they're going. Is it a requirement, A, to have insurance? And then who do they get the quote from? Does it come from Wells Fargo? Do they have to go somewhere else to get the insurance? And I've got a follow-up one around HOA fees. And we're going to come back to that one next. And there I see everybody smiling when you mention HOA. We love her. Don't give it up for your HOAs. We love HOAs. Let's talk about insurance first. How do they get it?
Yeah, great question. So the insurance would come in if they're not able to put that 20% down. And so that's where we would have
Okay.
that primary mortgage insurance.
Okay.
And that's something that they can always talk to with their lender, which would be us Wells. Chris, I don't believe there's any other route, if I'm not mistaken, that they would have to speak to. I just wanted to double check on that.
None that I'm aware of.
No. Okay. Just, yeah. I'm pretty sure. I just wanted to make sure I was right on that. But yes, they can discuss all of that information with us. If they're wanting to speak with us, with our consultants, they'll break that down, what that would look like for them, and as well the cost, if they decide to move forward, what those costs would look like for them. So
Okay.
that's something that would happen there.
That's super helpful there. And then what about insurance itself? So the insurance that you pay on a monthly basis. So you have your principal that you pay, you may have your escrow, essentially the insurance side there. Is that something, again, that folks need to get from Wells Fargo? And again, is it a requirement? Do I have to have homeowners insurance on my home in Poughkeepsie, New York, in Windsor, North Carolina? Is that a requirement?
Yes, it is a requirement. And that's something that they would have to do outside of Wells at that point. Yes. Good question.
Good. So another one of those fees there. Speaking of fees, yes. HOA, you want to talk about homeowners association and whether you have a pool or whether you have the green space. Let's talk about, because again, scholars, we're making it clear. You understand what you're paying for your mortgage. You understand what you're paying for rent.
Yeah.
But there's more. Mr. Thompson, and there's more.
And there's more. That's right.
And there's more.
Arlene, Homeowners Association, what in the world is that?
That is, so I can actually talk a little bit about that because I have homeowners insurance. I mean, HOA. I live in a community where it is. We do have HOA fees, and it really just it depends on what is included in that. For mine, I can talk on mine. Mine is the pool fee. We do have a community pool, so that's part of it. The maintenance of the home, little things like that is where that HOA will come in, and that's going to be totally separate, of course, depending on where you're buying your home, but that's where that HOA would come in. It would be an extra fee, and it depends. The price could vary depending on the community as well. I've seen it from anywhere from $100 to $300. It's kind of wild, but it really just depends on that.
And Arlene, are those baked in intentionally? And Chris, Mr. Thompson, feel free to jump on this. Are those baked in intentionally to make the space more beautiful? It's a shared space, or maybe there's something that's there. It's essentially something that everybody gives a little bit to make the neighborhood a little better. Maybe they do the shrubs, or they do the trees, or keep the pool clean, to your point.
Yeah, for shared and common areas. And then if you're looking at condominiums, there's also an insurance rider that's tied into that for the exterior of the building, not the interior walls, but for the exterior of the building. So that's something to keep in mind as well.
Amen.
There's a lot here, team. There's a lot here, but you're in good spaces. Mr. Thompson, this is going to be my final one, and we'll let you get the last question. Okay. This is one, candidly, team, that's just come from the news recently. Many of you all have seen some of the recent storms. Maybe there were folks on today that had family members that were impacted in some given area. Our hopes and thoughts and prayers are with those folks as they're recovering. Arlene, is there insurance to help in a catastrophic type of an event? Let's say there is a flood of some kind or fire damage. Are there resources to help customers and kind of really protect them in those kinds of ways? Would you talk about those pieces?
Yeah, absolutely. I know briefly about it. I don't know if Chris, you want to jump in. But from my understanding, that we do have resources, absolutely. And usually that's part of the homeowner's insurance, for
Sure.
any flood damage, anything like that. But Chris, I don't know if you want to add more to that.
Sure. Yeah. So again, not knowing where you're going to purchase, let's just talk about flood insurance as its own standalone entity, right? Um, when you look at a property, they'll determine if it's in a flood zone. They use a 100-year flood map. Now, the problem with that is, as we've seen with these recent wave of storms, we have flooding in areas that haven't historically been a part of the flood map. So certainly something
Wow.
to keep in mind. Downtown Atlanta flooded, for those in the ATL. Again, so that area historically wasn't a part of the 100-year flood map. But to stay on topic, what the lender will require is a flood cert where they will look at the flood maps. It's a 100-year flood map. If your property is in a flood zone, then you're required to get flood insurance. If it's not in the flood zone, then people typically aren't required. It's something you may want to consider if you're adjacent to a flood zone. It's much cheaper than dealing with the occurrence of a flood,
Mm,
because flood is rising water, and that is where the hazard insurance draws a line. They draw the line at the rising water, and the hazard insurance covers the water that is descending. So again, if you can imagine, like um, a ring around the room, right? Literally where the water rose, and everything below that ring would now be covered under the flood insurance policy. Everything above that
mhm.
ring would be covered under the hazard insurance policy. So um,
Wow.
definitely, if you're purchasing in the area, you probably have that conversation with your realtor, your lender. Wells Fargo would require a flood cert on that property, and then you would be eligible for the flood insurance to help offset that risk.
Yeah. Chris, Arlene, this is helpful here. And Michael, special thanks to you here
Mhm.
from Wells Fargo. Would encourage everyone, disaster assistance and property damage support. We'll try to drop that into the chat as well for folks. But again, property assistance, excuse me, disaster assistance and property damage support. Michael, thank you so much for sharing that link. Scholars and those listening to the playback, be sure to check that out to be able to learn more. And team, the only other thing that I'll touch on, and then Mr. Thompson will let you close this with the final question. Remember, your insurance is something that you need to look at periodically. And keep in mind, there's the dwelling itself, but then there's the contents of the dwelling. It's your clothing, it's the television, it's heirlooms, things along those lines. You need to factor all of those things in and periodically make adjustments. Make it the same way we adjust in any other kind of area. Listen, we have some more things now at the house. We now need to make some adjustments relative to the policies that we have, though. But the insurance piece is an important one, everyone. Do not forget about those components, again, both for the dwelling itself and for the contents. Very, very important. Mr. Thompson, bring us home with the last question or comment that's top of mind for you, and then
Yeah.
we'll give
The
Arlene
last
and Chris
que-
an opportunity to share a closing thought.
The last question has to do with the process. Young people who are buying houses, we're accustomed to buying houses like, well, Robert said he's gonna sell me his house. Okay, I just gave him a check and he just gave me the house. So let's talk about process. If you're dealing with Wells Fargo, there's got to be a process, right? It's just not like you gave me a check and I gave you the keys. So
Yes.
it's far more extensive than just hand me the check and I'll hand you the keys.
I wish it was that simple. Wouldn't that be nice? Yeah, we do have a process. It's actually what we call an assumption. It's something we have a specific department that you would have to speak to, and basically we would have to take a look to see if that loan is assumable. It really all depends on the financial situation, and but that would be an assumption, is what we would call it at Wells Fargo. I don't know if Chris, you wanted to add anything to that.
No, that's assuming somebody is giving you a house. Our, would you touch on our process for individuals that are looking to just purchase outright?
Oh, was that for me? I'm sorry.
Yes.
Yeah, just to purchase, I would say definitely starting off with that pre-qualification, pre-approval
Yes.
process. I
Yes.
would say that is definitely the first step to take. And keep in mind, just a refresher on what I talked about, that pre-qualification, there's no commitment, it's no cost. It's more of just getting an idea of what you might be able to afford. And given, based off of the verbal information you provide for us to our consultants, I would say that's the first step to take. And once you get that pre-qualification, you can take that information away, do what you will with it, work on a couple of things. If there's things that maybe your credit score is not exactly where you want it, maybe you want to increase it a little bit more, maybe you have to make some extra payments on a credit card, or whatever the case might be in your situation. But start there, and once you're ready, that's where you would then move on to that pre-approval, because that pre-approval letter is really where it sets the tone and it gives real estate agents the idea that you are serious about buying. You can start looking for the right home once you know what you qualify for, and go forward from there. So that's where I would say start first, is that pre-qualification.
We love it. We love it.
Yeah,
Great
that's great.
insight.
Yeah. And that's what
Arlene.
I think a lot of them want to hear, because the process can be intimidating,
Mhm.
Absolutely. Absolutely.
And
100%.
it's also not 5 minutes, Mr. Thompson. This is not five. This is not microwaving popcorn.
That is true.
It takes longer.
That is so true. And that's it. That's it for me. I know, based on the tone and tenor of what we've been discussing, I think either our participants are getting all this information, and maybe we've answered most of their questions, or they are too shy to raise questions at this point.
Well, Mr. Thompson, this is a safe space.
Yeah.
And what I will tell you, scholars, if you haven't gotten an opportunity to submit a question, please get connected with Arlene, connected with Chris on LinkedIn, have that discussion. We've also got Teresa, we've also got Michael there in the background. Certainly want to shout out what they've been doing with the suggestions and content that they've been providing as well. But get with the team and let's continue to build going forward. Arlene, Chris, give them a closing thought. What's an action item here from today? We'll give them some more. Chris been giving a homework. Both of y'all been giving a homework already.
Yeah.
Let's give them some more. Midterm's already over, so they're done with those. Give them some more homework.
I can start. So first and foremost, I know it was a lot of information. It's a lot. It's a lot to process. There's a lot to take away, and I'm sure there's going to be a lot of questions, after this meeting. But hopefully, there were some big takeaways, and I just want to share that it's possible to buy a home. I'll use myself as an example. I am 31 years old, and I just bought my first home last year. And it was not the easiest, scariest thing I've ever done in my life, but it's totally worth it. And the biggest recommendation I would give is the more that you can prepare, the better. The more that you can get ahead of all these different factors that go into place when buying a home, the more prepared that you'll be. Because there's a lot that they take a look at in underwriting. Credit score is so crucial. I know it may not seem like it's possible, the times that we're in, the markets that we're in, but it is possible. And I would say just the more that you can prepare, the better for yourself.
Yeah, and I'll add, when we conclude today's session, you will receive an email with some great resources. There will be a link that you can go and just play around with this calculator to get a sense of what your rent would translate to in terms of a mortgage. Sometimes that is just enough of an impetus to kind of get you motivated when you realize that for what I'm paying in rent, I can own X in a house. So if you and your roommates together are paying, let's just say $1,500 in rent, and the calculator tells you that for that amount, I'm just throwing numbers out, you could say $150,000 in a mortgage, right? And you look around on Zillow or some of the other resources there online to get a sense of what that looks like in your area. You may get motivated to do something because you're already paying somebody's mortgage, whether you realize it or not. Why not pay your own?
Here, team. Here.
Yeah.
Well,
I have a quick question.
Yes.
Yeah.
My apologies, ma'am. Please, would you give us your name, please? Oh, no,
My
my
name is,
apologies. No, do me a favor. I'm taking it. I'll retract that one. I'm retracting that. Don't give us your name, but feel free to go ahead and present your question.
oh, okay, all right. I was just wondering if before speaking with a mortgage consultant, should you already have a certain amount of savings like in the bank account already? Or
A great question. And may I ask this one as the team proposes that, and thank you for raising your virtual hand to present that to us. What region of the country do you live in? That may be also helpful for Arlene and for Chris.
I'm like in the southern region.
Okay, perfect.
Yeah.
Perfect. What should someone in the South be thinking about, team?
Well, I'm in the South, so I'll take that one,
Okay.
Arlene. So the great thing about the South is we have very affordable inventory, right? And I don't know where you are in the South, but by and large, we have very affordable inventory, and we have a number of programs for first-time home buyers, for borrowers that are in that income threshold whereby they would qualify for some of the different assistance programs that I discussed earlier. So I would say it it's it doesn't cost anything to pick up the phone and reach out to one of the housing counselors that I referenced in the chat. It doesn't cost anything to connect with one of our home mortgage consultants just to give you a snapshot on where you are. I think if you put the obstacle up that I need to save X amount of monies to even initiate the process, that it creates this imaginary wall that you have to overcome. Whereas if you at least avail yourself of those resources, they can give you a specific dollar amount, again, based on your unique financial situation. We can't throw out a number and say, this is how much money you need to save, because some of those numbers are percentages. So when we talk about a down payment being 3% or 5%, we may not know that you have military history. And so you may qualify for 100% financing, as Arlene touched on with our VA program. So there are programs that will help you with the down payment. There are programs that will that we can layer to overcome the upfront cost of home ownership. So talk to a professional and let them examine your unique financial situation and give you a very prescriptive path to home ownership, so that we're not making just cavalier statements about how much money you would need to initiate the process.
That sounds good. Thank you for that.
Yes.
Thank you for sharing that question. There's some great resources out there, the mortgage calculators and others, where you can kind of plug in some items there and say, hey, based upon the market. And again, team, there's going to be some homework here, just like we have homework in class or at work. You get some homework with this. You can take a look at some of the resales that have been happening in markets or regions, or maybe you're thinking about moving from the South to Texas or out to the West Coast or to the Northeast. You can take a look there and kind of see where things are pricing in. And then from there, be able to start making some calculations, maybe back of the napkin side, but you've also got, again, these great mortgage calculators that can help you build a path. And I just love, team, what you said. And Arlene, closing thought from you next. The ability to, if this is a goal that's important to you, it's attainable. May not be next week, may not be next year, may not be in the next 36 months. It may take 3-4 years further out to be able to get things done, but it is attainable if it's a goal that you set. Arlene, bring us home.
All right. Well, thank you all for joining our call. I did also want to quickly remind everyone that we will be providing a couple of links and phone numbers after, so you guys can always give us a call, and our team is here to help you. That's all we want to be able to do, is help you.
Right. Well, team, great information there. And let's give it up, y'all. Give it up. However you want to do your claps and snaps, feel free to come on camera for those that are still out there that want to jump on for a minute. We're pulling out all the stops. This is the last webinar of the year with Beyond College. So we're just appreciative. And again, just special thanks. And if you didn't get a question answered today, team, connect with these amazing leaders. Reach out to them, connect with them on LinkedIn, send a follow-up note. But do us a favor. If you learned something from today, take one snippet of something that you heard and throw it on LinkedIn, throw it on IG, throw it on some of the other social media handles out there, or channels, better yet, and mention, hey, I heard Arlene say this, or Mr. Thompson asked a great question, or Chris brought this up. Share it. Let's find a way to pay it forward. and let's continue to build home ownership and make sure that folks are aware of these opportunities for the future. All right, everybody, we're going to get you out of here just a couple of minutes early today. We've got some final reminders to kind of touch on here, and you'll see these on the next slide as that's loading for us. We've got some really, really basic information that I think will be helpful for you to kind of hold on to. We've got a really amazing series that's up and running called the A Different World HBCU Tour. Huge shout out to Chuck Bishop, huge shout out to Iwanike Brady and other partners that are spearheading this work on behalf of the firm. And we've got a couple of snippets here, one from a piece that recently ran through an ABC affiliate, I think out of the DC market and region, and then a link over to the tour website itself. So the tour is just about to announce the campuses for 2025. So bookmark these pages. And again, this is another place where you can catch up with the Wells Fargo team. You can catch up with the folks from Cisco and from some of the other corporate partners that are there connecting in. So we can, again, talk about the importance of college, but to talk about other topics that are really, really special and important too. So jump in, be a part of the tour. You'll be able to learn more great information from there. All right, so we've come to the end of the road, everyone. You'll see this on the next slides down. We've got our Beyond College webinars. We've completed all of them for the year, everybody. And you'll see on the slide here the playbacks that we have available. And again, remember, all of these are available via the MEAC's digital network and their YouTube channel. So go back and revisit what we talked about for budgeting and money management. Jump in on sponsors, mentors, and sponsors. Tap into what we shared around the resume writing components of things and interviewing skills. Jump in and let's chart those pathways to graduate schools and to those advanced degrees. You know, let's talk about entrepreneurship as we did back in May, and then securing the bag. One of our hottest sessions of the year was that securing the bag, where we talked about protecting the nest egg. And this becomes, you know, home ownership becomes a part of that as well. Then you've got the playbacks again that we have for interviewing. My hope is that, or internships, better yet, my hope is that everyone that's on today that's interested in an internship has already been on that site. My hope is by now you've already been there. Maybe you've submitted your application for consideration. From our graduating seniors. Man, I hope that you've been submitting those applications for consideration, but go back and revisit that content because deadlines are approaching very quickly. Success strategies for college. I think that was a great session from our partners there. Sylvia and Casey talked about the pieces that you need to be thinking about there. Social media smarts, another one of our faves. And then unboxing credit, which kind of goes hand in hand, candidly, team, with some of the things that we shared here today for your path to home ownership. Again, same rules apply. If you enjoyed some of this content, or maybe you're seeing some of it for the first time, jump out to the MEAC's digital network. Very easy to search. It's MEAC Digital Network and MEAC YouTube. You'll see the links there and pay it forward. Throw that under your handles, share that information with others that you think may be able to benefit from it. And let's continue to share these great things in the days ahead. So with that said, everybody, we're at the end here for 2024 for our Beyond College webinar series. There are countless folks that we need to thank. And so just indulge me a little bit on this. But first of all, I want to give a huge shout out and kudos to the MEAC, Mr. Sonia Stills, obviously to Mr. Thompson, to Patricia Mayfield, to Dominique, to Randy, all of the folks behind the scenes that have made this series really great. And so to the MEAC team, thank you so much, and wishing you all continued success through this academic year. And yeah, we can't wait to get down to A to be a part of that celebration ball. Who will it be is the question. Mr. Thompson, I'm not going to put you on the record, but we know that the MEAC will be well represented there with things. And it's been a tight year already.
Oh, yeah.
With lots of more games to go. So MEAC team, just huge shout out, virtual high five from your friends at Wells Fargo. Again, for all of our presenters, I won't go through names, but for anyone that's presented with us, whether it was our sessions back in January or the amazing mortgage leaders that are helping us close the year here in November, just thank you for what you shared. I think you delivered things in a really great way. And I'm excited about what we've been able to get accomplished and optimistic about what we'll be focusing on for 2025. You know, 2024 marked our 10th year, Tim. This is the 10th year that this series has been up and running. So I want to acknowledge someone else here when we started this work 10 years ago, it started in conjunction with some of our partners in the marketing and the recruiting area. And one partner specifically, I'm going to call up, her name is Maggie Shortis. So Maggie, I don't know whether you're joining us today or whether you listen to the playback on this, but don't you remember way back in the day when we started all of this good stuff? And wow, look where we are 10 years later, and imagine where we'll be heading in 2025. So huge shout out to Maggie and to our other partners across external engagement that have helped us in other areas. And last but not least, she refuses to come on camera. And I try to make her do it, but she's not listening to me. Angel Heyman, just thank you for your leadership. It is an honor and a privilege. I give it up for y'all. I want claps and snaps in the chat here. Angel, we could not do these events without you. Thought leadership, engagement, keeping us on pace, candidly challenging us to think about things differently in different types of areas, pushing us forward. Some of this content that we create is things that you designed. So a lot of it. So just thank you for your leadership there. I hope that you feel good about what we've been able to get done here for this year, and we'll be excited to work back with you and the rest of the team in 2025. So shout out to Angel Heyman, y'all, just for putting in work and having to put up with me. That's the other piece of this thing. That's the other thing that's real fun. So with that said, everybody, pay it forward. Let's share this information with others. Get it out to others that maybe didn't get a chance to join. Let's handle business. We're in the home stretch. November's here. Before we know it, it'll be Thanksgiving. Before we know it, it'll be Christmas, and we'll be into 2025 in the new year. So please make sure that we're handling business. Let's do the things that we need to do on campus. Let's continue to support one another in those kinds of areas. And then let's start applying across any of these topics that we've touched on. Let's apply this information and find ways, again, to hashtag pay it forward and give it to someone else that was not able to join us real time. With that said, Dewey Norwood signing off here for 2024, but we're coming back in 2025. We'll have more details to share, so connect with us on LinkedIn and be on the lookout for more updates in the days ahead. Everybody have a great rest of your night. Let's finish this semester strong. See you in 2025, y'all. Till next time. Good night.